thank you to everybody out there who's going to be watching this with us on YouTube and Facebook, and thank you guys for showing up. I appreciate it. We're going to do the Desert Housing Report today for March 2022. My name's Eric Meeks. I'm the broker owner of RE/MAX Desert Properties, and we have with us a couple of guests. We've got Wayne Bernard here sitting in front with us. Wayne just recently bought a home here in the Coachella Valley. How's it been the last couple of days?
Busy.
Yeah, I bet.
Just getting things organized.
Did you call any of those tradespeople?
I did, and I had one of your fellows come out yesterday and remove a bunch of stuff that I don't need and want, and he came this morning, actually. Went very well.
That's how it starts. It is. And Francisco Jilote there, the team captain of Team Jilote with RE/MAX Desert Properties. How you doing, Francisco?
I'm doing great. It's a beautiful Friday.
It is. It is. Well, thank you for being here. And Bruce Sherman, he's with WFG Title. La Quinta, Palm Springs, the High Desert, they're all over the place. Bruce, thank you for joining us. And what can you tell us about what's going on in the title world?
Well, it's been a brisk year so far, and it seems like maybe business is leveling out a little bit right now, but no concerns. It's business as usual.
I'm getting that same feeling right now. I'm anxious to see what the report shows us on that there. And with that, we're going to jump right into it. Okay, this is the March 2022 report that we're going to talk about today. And by the way, out in the audience, I can see we've got Becky Bowles and Cindy Greenwald and Arthur Fleischer. We got a couple of guests over the internet. So thank you all for joining with us out there too. This report covers basically the 9 or 10 main cities of the Coachella Valley, everything from Desert Hot Springs out to Coachella. Okay, and as you can see, they're color-coded through there with all the cities here. And we'll get right in a summary here. Probably the best thing I can say on this report is thanks to the efforts of the California Desert Association of Realtors and the Greater Palm Springs Association of Realtors. They combined their efforts together to produce this report. I'm allowed to share it with our guests over the internet, thanks to my membership of both those organizations. So this is the first chart that comes up. This here is the median detached home price and what's going on with that in the Coachella Valley. These are just your regular single family homes. Now it could be in a gated community or an ungated, but think of just the typical 3-bedroom, 2-bath home. It could be a 4 or 5 bedroom, but regular homes that everybody's living in. And as you can see off on the right-hand side, it's up to about $600,000 for the average home price, which is a huge spike. I'm following back with it, okay, here, let's go to that low point there. March 2020, okay, which was right after COVID, okay, right after, about a month after our first lockdown, right in there. That's when we started seeing the rise in prices. And I know that this fact has been talked about a lot, with just about anybody who's assessing the markets these days. But it is still surprising to me to see how much it has grown in so short a time. Francisco, you're dealing a lot with buyers and sellers out there. What kind of feedback are you getting from both ends of the spectrum and the buyers and sellers with the average home price?
At this point, there's a lot of concern on the buyer side because the prices, like you said in this chart, they've increased so much, but with the recent increase in interest rates, it put a little fear in them. And now, if they were priced up before, now they're in a more difficult position because now that price point has gone down significantly with that, increase in interest rates.
Right, their affordability.
The affordability.
Yes.
The homes are still affordable, but just at the same time, they're less affordable due to the interest rate spike recently. As far as sellers, they're also a little scared. They see, once people get scared, then I don't think they make the right decision. So that's why we're getting a lot of the same questions right now. What do you think is going to happen with the interest rates? Our home price is going to drop? But the reality is that the inventory is still so low that the buyer demand is still going to continue to keep home prices where they're at. At least that's what I'm seeing.
And I agree with you on that. And unfortunately, I think interest rates are going to go up, but I see both the positive and the negative about that. The positive is that I believe home prices right now have outpaced the average income too much for many Americans or many Canadians, Wayne's from Canada here, but from the average person, okay, to be able to reach that affordability factor with it. So I believe a little bit of leveling off will be good to allow wages and just people's perception to rise to where the current market is, because I also don't see it going away. Wayne, you recently had to deal with some of these concepts that we're talking about from the buyer side. How were you affected from the stuff that I was having to share with you and the feedback that you were getting from people on the state of the market and your buying decisions?
You mean down in the valley here?
Yes.
Yeah, well, we knew that prices had increased recently in the last year or two. And it was just a situation of knowing if the time is right for you. And for my situation was just needing to get in or wanting to get into something now. I knew about the interest rate increase possibility. We weren't mortgaging, so we didn't have to worry about that aspect of it. So it's just about knowing that you're getting in at a higher price in terms of the market. What it does from here on in wasn't that much of an issue for us because we're not doing this as an investment. We're doing it more as a place to come in the winter from Canada.
I hear you. I'm going to just ask one thing. Would one of you, Becky or Arthur, one of you two, how well could you hear us out there on the Zoom meeting right now while we're talking?
I can hear you. It's difficult to hear the other people.
Okay, we will keep that in mind. Thank you. I appreciate it. We're still learning a little bit of the technical layout of doing all this. So we're trying to work out every kink we can. So thank you. Bruce, I'll catch you on the next one. We're going to move to the next slide. Okay. This here is the median attached price. And what we have seen, if you look at the chart here, at about the same time in March 2020, okay, we had that dip right as COVID hit, where just inventory just evaporated. People pulled their homes off the market. Nobody knew what they were doing. But then it only took about a month or two, and we saw that steep spike, okay, happening right after. When we're talking attached prices, these are condos and duplexes, quadplexes, townhomes, those types of properties. So some sort of attached to a similar home, which generally lag a little bit behind a traditional single-family home. But as you can see, it grew substantially. The other one started from even less on it, but we went from about $275 on an average price to $450,000 in under 2 years. Okay, for that there. So not quite a doubling, but in every one of those years, it was probably between a 20 and 40% increase, depending on which neighborhood that we were talking here in the Coachella Valley. Bruce, are you seeing those sorts of things? You're dealing with a much wider, you're talking with a lot of different agents, okay, in your business. What kind of feedback are you getting with these?
Well, there's been obviously an increase in buyer demand, and people's lifestyles have changed for their working, how they work and working remotely. It drove a lot of people out to the Coachella Valley from other areas of Southern California. And there's people with cash now, a lot of cash coming out. So the combination of those influences, I believe, have led to the spike in values. There's still more demand than there is inventory. But at this point also, it seems like the buyers are not as easily influenced by the higher values as far as wanting to keep pace with that. Some of them are deciding to ride the fence a bit or wait a little while and see how this all plays out, because the huge increase in pricing has given some people the jitters. And also, I'd like to say that I've seen this kind of market before where the values go up and there's a pause. And sellers are usually, if the buyers are slowing it down, the sellers are sometimes thinking, wow, the market is really where it was a few months ago. But the buyers are saying, no, this is all I'm going to spend right now, or I'm not going to spend that much money. So it takes the seller sometimes 3 to 6 months to kind of realize that they're not going to have the demand for their property that they might have had a few months before. Does that sound reasonable? So that creates sort of a leveling out, a pause, and let's see kind of where it goes.
I agree. I'm seeing my first little tidbit of price reductions, okay, on them. And it's not huge of what's going on, but even at $10,000 or $20,000, I've seen on one or two single family homes in Palm Desert. Okay, properties that were in the 650 to 800,000. If they were priced at 819, maybe they dropped it back to 8. That kind of thing, and that they'll have to work out the percentage on that. What is that, like a 2%, price reduction when we do the math on that? So it's not huge, but just a little bit of competitive edging. And I don't believe we're heading in any sort of a downward spiral, okay, on the market myself. I believe we're probably going to plateau off, okay, for just a little bit and have a more traditional price increases of 2-3-5% over a year. I think we're heading into that myself, but that's why we look at these housing reports and see. Unfortunately, we always have to look what happened last month instead of being able to assess what's happening exactly today. That's about as close as we can get with it. On the next slide here. Okay, now this one here, let me see if I can enlarge these just a little bit. Okay, on this one here, we're looking at price increases on percentages, okay, within all the cities in the Coachella Valley. Okay, so if I'm looking up here, Coachella actually has had the largest 12-month price increase at almost 50%, okay, with it. And that's huge. And I think this is pretty typical. I'm surprised to see Desert Hot Springs this low. That might have been a 1 month. I think last month Desert Hot Springs was somewhere up here in the top 3 or 4 on these percentage. But even just a couple of percentage points can vary this month to month overall. But a trend that I'm seeing in it, and correct me if I'm wrong, because Francisco, you sell a lot of just like regular houses for Middle America with what you do. Are you seeing like what I'm seeing, where like Desert Hot Springs, Coachella, Indio, even Cathedral City, just what I call regular blue collar neighborhoods, okay, in the Coachella Valley, those have had some of the biggest price increases on a percentage rate that I've seen it everywhere. What do you say?
That's exactly what I'm seeing. I live in Indio. I work a lot of Indio, Coachella, and the biggest reason why they're getting such an increase is because Palm Springs, La Quinta, and Cathedral City, they stopped allowing short-term rentals. So all the traffic, all these investors dumped the inventory in La Quinta, Palm Springs, and Cathedral City, and they're just doubling down in Indio, heavy in Indio, heavily in Coachella. Coachella right now has the lowest inventory in the entire valley. They're probably right now, I think I checked on Monday, they're at 13 homes. So they go from 13 to 16 on an average for the entire city. And because the investors are just scooping them up, paying all cash, it's really, really competitive because all they're doing is turning them into short-term rentals. And Indio and Coachella still allow them, so everyone's fighting for the same houses. And the only available homes to the locals are homes that don't allow short-term rentals. So you look at Terra Lago is a great community. Terra Lago is one of the only communities that is an HOA that allows short-term rentals. So their prices are 300% easy. But then you go to Haciendas or Sonora Wells, they don't allow it, and their prices are not going as high because of short-term rentals. So
that's a trend I've seen in the major cities. Palm Springs, which is the most favorable for short-term rentals, as a city, it's just head and shoulders advancing more than the other cities like Palm Desert or Rancho Mirage, Indian Wells that have much more restricted. La Quinta, I think, is a great one, which as a city have much more restrictive short-term rental rules. So I find that very true also. Another thing that you started to touch on there was investors, coming in on the properties. What I think you're talking about is investors who are either fix and flips or turning them into vacation rentals. Is that correct?
yeah, that's exactly it.
Have you seen a type of investor, which I'm just starting to see this little window open up on this, where either a major corporation that's buying for like upper management so they can entice people out, or I'm seeing a company that has started up, like a third-party specialized type of company that will take a finance buyer, pay for the home cash for an additional fee, close the deal short time so that buyer can purchase the property as a cash buyer and therefore help them to beat out other people who are financing. But then once it's owned by that company, then they set up the financing and put it in the name of the actual buyer. Have you heard of anything like that?
I have not.
It's barely started. I've been able to track one company in San Diego doing it so far. I haven't dealt with it here in an escrow situation, but I have heard some grumbling from agents, and I'm reading about it in some of the real estate magazines and websites and stuff that I go to for information. So I wonder if that's going to be a growing trend of something that we see, which wouldn't hurt you because you were a real cash buyer, Wayne, on that there, which is fortunate. That buyer, cash is really turning into king in these days so that you can secure a property. Looking at it, just to run over some of the others citywide on that there, if you read these numbers, we're anywhere from 49 to 27%. That's in a year-over-year increase. So that, to me, is not indicating yet a slowdown in the market. So when I talk about these one or two glimpses that I've seen in a price reduction, we'll have to see what the April report shows us. That'll be out in about a month. We may be able to see that on that here. And average site detached, average site detached. Oh, so these are the detached homes. And on the bottom side here is the attached. Desert Hot Springs, there we go. 57.5% increase in a single year. On that, therefore, just a regular 2 or 3 bedroom home in a ungated neighborhood. Those are huge increases. I'm sorry, you had a question out there? No, okay. Moving on here. On a percentage-wise here, so 3-month moving average. I think this is quantity of sales over a 3-month average, which you can see total there is about 900. 900 homes in a single month that are selling. Think about this. When we're on a slide or two, we're going to hit the quantity of homes on the market at any time, and then let's compare it to that 900. I think it'll give us a startling fact as we get there. And a year ago, we were at 1,129 versus 910 now. Bruce, are you starting to hear from agents? How serious and what type of agents are you seeing that are still able to do business in this market?
Well, since there's less inventory, it's been very challenging, even for the realtors who usually have a substantial amount of listings, because there just aren't as many to pick from, right, or to market to. So it's kind of leveled the playing field out a little bit for the real estate professionals, where an agent might have 20 listings at a time. Now there could be 3 or 4 in a market where maybe there were, so let's say there's a country club that historically, let's just say PJ West in La Quinta. So PJ West traditionally would have about 120 listings on the market right now.
Right.
But the reality is that there's only about 12, so, or 18 or 20. So that's really impacting the sustainability, let's say, of some of the real estate professionals moving forward, and really putting squeeze on some who are used to having a lot of listing inventory and they don't have much right now.
I agree, yes. Looking back at the chart, something that'll play into this. Now, we are doing over 900 sales a month right now. And I don't mean we, RE/MAX. I mean we as the entire Coachella Valley Associations of Realtors. Okay, that you're doing. There's still over 900 sales. And a year ago, we were roughly 20% higher, maybe a fraction more than that, with over 1,100 sales going on in a similar time period for it. And then if you go earlier than that, to pre-COVID, what we're seeing here is the traditional ups and downs of what we would call the summer and winter markets. Okay, where sometimes of the year we do a little bit more, sometimes a little less. And these numbers are roughly the same sort of numbers of quantity of total sales of 700 to 800. But at the time, going back 2 years, there was like actually if we go back 3 years, there was probably about 3,000 homes on the market at that time. And these days, we're at a fraction of that. Okay, and it would fluctuate right here. And as we went further back, okay, there would probably be 5,000 homes on the market at a single time. So those of us who have been in the industry here for a handful of years or more, especially if you can go back to about 2011, if we can go back 10 years, at that time there was close to double even those numbers. And that's why people will talk about a market where you could go see 10 or 12 homes in a day that all fit the style of home that you're looking for, and you can negotiate a price lower than asking price because you had multiple sellers competing for roughly the same amount of buyers as what we have now. But now those dynamics have flipped. And so you're lucky if there's 3 homes on the market that fit the classification of what you want. I am finding with some buyers, they have to wait until that type of home comes on the market. Okay, I know, Wayne, when we were looking around for homes, it was a little tough. Would you agree? When you were looking for your home, how easy did you find it to locate a home that you were comfortable and happy with its condition and pricing and all of that?
Yeah, it was challenging because, of course, I was doing this from Vancouver,
Right.
Canada, dealing with you, and you were looking around showing, and you took a number of videos. So I got to see a lot of things. And then I came down, as you know, for a week.
Right.
And in a lot of cases, it was, trying to find the type of unit that we wanted. And when they came up, you knew you had to kind of make a move on it. Either you come in and a little bit over asking price seemed to be pretty normal. And if you tried that, which we did once or twice, and you would miss out because now that may have changed now a bit. And just as a perspective, I just want to give you a comparison with Canada, Vancouver.
Okay.
Our market, all these slides I'm seeing are virtually identical to what we've seen happen.
Okay.
Price increases for us in those 2 years have gone up 50 to 70%. And people were getting $100,000 to $300,000 over their asking price for over $1 million house. So but that's starting to change. Now they're not getting the multiple offers now so much. And they're maybe taking less. And so it was the fall and early winter when things were at the peak. And now it's kind of level, very much like what you're showing here.
Did Canada, just to digress for a second and follow you down that line of thinking, did Canada do similar things as a country where they were increasing interest rates? Or I know up there you have a lot of Asian buyers, especially in the Vancouver area, that are doing it. Didn't they put some laws in place that like regulated how much they maintained the homes and how much they were living and stuff like that?
That's been going on for a while to do with speculative investors. And also now they're putting a cap on foreign buyers. So they're not allowing foreign buyers for a period of time to try to settle things down. So that was an issue in the past. But it's been happening in Vancouver like that for a long time. And now they're starting to challenge those buyers and say that we don't really want you to be artificially pushing prices up. And we've seen the same increases in interest rates that you're seeing here. They're going up like 50 points. Every time they meet, you have the Fed and we have our own banking system. Very much the same increases you're seeing.
Well, I would say that we still very much welcome our foreign investors and buyers, whether they're buyers or sellers. But your speculative buyers, I bet, are very similar to what Francisco's describing that's going on down in Coachella and Indio and those areas of the desert. And all over the desert. That's just the area that he's selling a lot in. Move on to the next slide here. Detached and attached total sales, very similar graph to the last one, doing somewhere in the 900s for total sales on any monthly period. I want to find one in the home sales by city. This one can be interesting. The gold bars, are, I'm having trouble looking at that. The gold bars are a year ago, the blue ones are right now. So what we're seeing is that last year, basically, city over city, there were more sales, because there was even more inventory. It wasn't a lot more. We thought we were incredibly low on inventory last year, and then we met 2022. I remember looking at one of these desert housing reports back in October, and at that time I was looking at September's numbers in October, and it was just a little blip and showing for availability coming on, and I had about a month long a honeymoon period with thinking that, wow, maybe we're returning to a more traditional market. And then it nosedived in November. And I was like, no, we're still in the same market. Okay, so it is a tough market out there, but in some cities, if we look at here, like it's the big one now that's in Palm Desert, which has probably one of the single, if not the largest, it's one of, but variations of types of homes, price ranges on homes. Palm Desert is a very diverse city, even more so than Palm Springs or Indio. It kind of encapsulates the best of both of those on it. And a year ago, there'd be 253 home sales on an average month versus now 175. And there's still the same amount of people roughly that are looking to buy, not sell. I almost said sell, but no, that's not the case of what's going on there, but everywhere. And I'll tell you, just to briefly go this way, as a broker, I see the agents that are best in touch with their past clients that are weathering this market. I'd like to also throw in some marketing efforts, and I know, Francisco, you do a lot with marketing with TikTok and Instagram, but I also think you have a good client base behind you at this point in your career too. But some combination of marketing and staying in touch with past clients is the key to getting through this time period. Home sales by price range. This one can be fun. Okay, I like taking a look at this one here. It's something that is very reasonable and easy to understand. Because basically, between 200,000 and 600,000, which is kind of a wide gap, but that's where the bulk of stuff is. This 3 to 500,000, that's where the typical person buys a Canada. If you think about school teachers, cops, waiters and waitresses, grocery store clerks, pool guys, tradespeople, maybe not the owner of the contracting firm, but his foreman and his best drywallers. These are the homes Middle America buys right there. And that's where the bulk of the population is. Would you agree, Francisco? Is this where your primary market is that you're dealing with?
Absolutely.
Yeah, it is. And then as we go farther down to the more expensive, and this is something that I'm seeing, Bruce, maybe you could confirm with me on this, because I think that you deal with some of the agents that are selling in these higher price ranges too on it. I have a friend, okay, who is one of my best friends ever. Okay, I was best man at his wedding 20 years ago. We both met our wives about the same time. His future at that point took him to Hawaii, where he ended up working for hotels and then working for the military and stuff. And he's got a great engineering job, done very well in life. But even with all the equity that he made in Hawaii, as he wants to move back into the desert, as he's hitting his retirement year, he's finding the homes that a couple years ago were in this 5 to 650 range are now in this 8 to 900 range. And just like we were talking earlier, and I think it was you, Francisco, who brought this up, the dealing with the mental impact of that, of where your dollar is going to buy and what does that mean and what you have to adjust to if you still want to spend the same amount. So either you have to lower your expectations on the home you're going to get, or you have to increase on the amount of price that you're willing to spend. Yes. Bruce, give me some feedback on that, because you've probably dealt with a few agents who are hearing that rather than just hearing it from me.
Yeah, so it almost covers all markets because there seems to be demand in the high end where there isn't a lot of inventory now, as well as the middle and lower range. The challenge, I'd say, for the middle to lower range properties are investors. And even some investors, based on the terms that they present, having cash, they can buy a property where, let's say somebody who's getting a loan and wants to have it as their own single family home that they live in permanently, as opposed to an investor, they're losing out on the offer war, bidding war for the property, even if they're paying more, because sellers are often looking for better terms. So they'll take a cash offer from an investor who's going to pay less, close it in 10 days or what have you, versus somebody who has to have a loan. So this is, I think, seriously impacting your normal buyer in those middle to lower price ranges. And a lot of the big money has been coming out from other parts of our country and, Southern California, to buy the higher end stuff. And a lot of that's been sold already. And there's still buyers looking in those markets. But there's a lot of cash in those markets, but they're not investor money usually.
I agree. I've heard a lot of feedback from agents that are telling me how they get beat out on price, and this might be what you're dealing with the speculators down there on the East Valley, where a finance buyer and the the seller has to be concerned with the rising prices. What's an appraisal going to come in at? And and they might be a good family, and I don't know if there's a letter with it, but the feedback you're getting is that they're great people, but they're financed. And therefore, will the seller take only $20,000 over asking price on the cash deal, as opposed to the finance person who might be offering $30,000 or $40,000 over? But when we hit that appraisal part of escrow in a couple of weeks, is that going to require a price reduction? Whereas if I take only the $20,000 over right now, I can close for sure. It's I can see everybody's head shaking, so I must have explained that fair on it. But it's a scenario that I'll tell you, I am very sympathetic to the average buyer out there on that there, because it's an impossible situation to win, or a nearly impossible situation to win. One of the only ways that I find is to just, you've got to be willing to beat your head against the wall until the brick cracks, and it'll feel like that for the buyers because they're trying so hard. And they know that they want the home, but you can't give up all your money. I mean, your kid still needs braces. Grandma needs an operation. The car needs to get fixed. Whatever it is that needs in life. And it's, I can do a whole show just on that one now. But I know, and I respect, you, Francisco, for the types of buyers that you deal with, that you're really trying to make those people happy. And it's a very tough world to do that right now. Housing inventory. Remember when I showed a couple of slides ago about 900 plus sales happening a month? How do we do that out of 678 homes on the market? Sell 900 in a month. That's a pretty amazing statistic. Francisco, you want to take a stab at that one? What do you think is going on there?
It's a good reflection of the big problem that we have. The only thing I see that's going to help in the near future is new construction. New construction in the Indio Coachella side. There's still a lot of areas where they're developing. So I would say in the next 2 years, that's going to just help relieve some of the pressure in those areas. But other than that, unless sellers get some fear in them, because buyers are hesitant, that might cause them to, okay, now I've waited too long, maybe now is the time before it gets too late. But even then, even if we were to go up to 900, which would be a good jump, that still wouldn't put us anywhere near where we should be.
No.
So, it's tough.
This is where I was talking about, look at the amount of inventory that we had. If we go back to 2020, okay, about this time then we were over 3,000 homes. So right there, 1 month into COVID, okay, we had, 6 times the inventory? We did 5 times the inventory of what we had there. And if we go back another year or two, we're getting into the 4,000 home range, all the way back to 2017, 4,700. So at that time there, it was almost 8 times the inventory of what we had at that time. It was just a different world. Personally, I'll go ahead and go down this rabbit hole just for a second, but I think we're going to see in politics, the voting public is going to begin to demand higher subsidies from governments. And I don't care if it's cities, counties, states, federal, whatever it is. But I think one of the only ways to approach it is that there's got to be some sort of subsidy to inspire builders to build more affordable housing. Okay, and I'm not talking low-income housing. That's its own, a kettle of fish that has to be dealt with. Because right now, if you or I were a builder, would we rather build a $500,000 home or $1 million home if it cost about the same amount of money, maybe to only a hair more to build $1 million home, and there's just as many buyers? I mean, the profit for builders, because we are, we are an economic democracy, you know, where people are trying to turn a profit. The money is there. So unless government starts stepping in, I see that as a widening gap, you know, and I hope that we can come up with a way to do it. I also think that apartment style blocks, and in New York they call this tenement housing, okay, for it. But I think we're going to see bigger apartment condo style buildings that might hold 20, 50, or 100, you know, 2-bedroom apartments in it, but they'll be sold as condos. I think we're going to see that type of housing grow up, especially as we move closer to inner cities. I think that we're going to see those. I just can't see a way that you can't have, again, middle America, those waiters and contractors and drywallers and teachers and cops. You can't have them commuting for 3 hours to work an 8-hour job. So somehow we've got to address this problem, which I think is going to continue for at least the foreseeable future. Months of sales and ratio. This is how we sell 900 homes out of 600 home inventory. We're selling them in 0.7 months. So in almost half the time, because a normal escrow used to be 30 days. You know, 45 days on some deals, Indian lease land, you know, if the person need a little longer with their financing that there. But now we're down to almost half a month that it takes to close an escrow. Were we like 2 or 3 weeks on yours, Wayne? What was yours?
Yeah, I think we were. It got extended a bit because of a few other issues that happened, but it was probably a good 3 weeks.
Yeah, and so you're right. We closed yesterday. We were actually hoping to close a week ago.
That's right.
But we're there. But that's again those speculative cash buyers, like Francisco is saying, that can say, "Look, I'll buy the house for $450,000 or $550,000, whatever it is, because that's the greatest quantity of sales happening in that price range. I have cash in the bank. I can close in 2 weeks." How are you seeing people handling inspections?
I represent a lot of sellers, so when it gets to the inspection part or any part of the offer, like Bruce was saying, the terms that they come in with are amazing for a seller. If you're going to finance, you have to waive the appraisal, which is tough, but that's the only way to compete with cash. So you have to waive the appraisal. They accept as is. They'll still do a home inspection, but they agree that they're not going to ask for anything.
Right.
So if you're a seller and your house needs a little TLC, as long as it's not, plumbing, electrical, or something structural, odds are this is a perfect time for you to sell your house as is.
Right. And when's the last time you did a termite inspection?
You know what? On cash deals, they waive them. You don't do them.
Yeah. Okay. Did you have something there, Bruce, you want to throw in?
No.
Okay. Months of sales by price range. Okay, so this one here I think is very understandable, and it kind of floats with what we were just talking about, where it's taking about a half a month. As we go lower on the spectrum, 0.3 of a month in that $200,000 to $300,000 price range. Okay, so very inexpensive condos, smaller houses, and the more Desert Hot Springs, Coachella Indio kind of thing. If it's a major fixer in Cathedral City, we might find stuff in those price ranges there. But half a month or less, okay, on the escrow. As we move up through the price ranges, we're still not hitting a full month as we go in there. They're still closing very, very fast. And as we go to beyond $1 million, we're under 2 months, okay, on it. We got to remember April 1st, 2020. So a month and a half, okay, on the homes that are $1 million and above. So it's a little understandable. If it's a bigger chunk of change that's being spent on the home, it might take a little bit longer to close the escrow. But if we were looking at these same numbers 1 to 2 years ago, even in these price ranges, in the under $500,000 range, would you agree that they were taking roughly 2 months, okay, to close an escrow between listing the house for sale, going through all of your buyers, finding some offers, maybe there's a price adjustment in there somewhere as the seller comes down to where the buyers want to be so we can field in some offers, and then going through a 30-day escrow. It wasn't that long ago, and they'd be in the 2 month range or some of them even more. But it's the shifting market, how fast it's moving. What's your last listing like that you did, Francisco?
I'm averaging 48 hours.
48 hours from putting it on the market to getting an offer or accepting an offer?
I usually put them on the market like Friday, and it shows Friday, Saturday, Sunday, and then Monday we gather up all the offers, and we're in escrow on Monday, so 2 to 3 days.
And Bruce, on average with the escrow, because you're also running an escrow company with what you do, how long are you seeing most escrows take?
I'd say most escrows are running about 30 days.
They still are.
Yeah.
Okay. How about? I mean, are you seeing any sort of, or the cash buyers that we're talking about? Or
Some of the cash buyer escrows are shorter in term, but it just seems like we're holding in that 30-day range a lot.
okay, okay, yeah, good to know. Well, you're doing a wide variety of escrows too. So I mean, you're doing finance and cash and all that there. So on average, I can still see that still, and that's true with. Well, I moved off the last slide. If those are an average, if the average one is taking 0.3 or 0.7 of a month, that means some are running more than that, but a few are running less. So, month of sales by city? Yes.
I just want to add something here. I think one of the things that really contributes to the timing is how fast the sellers are willing to move. Because I've had several buyers that could close in 2 weeks, and the sellers, either they don't have a place to go to, or they're not willing to move that fast.
I've seen a few of that too, and that's a good point.
Yeah. So it's not necessarily how fast the buyers can close. There's another component, and that is just simply how fast the sellers are willing to get out of the house.
Correct, yeah. And sometimes, I don't know if you've dealt with this lately, sometimes you've got a seller who hasn't even ordered the moving truck and team to come do the move, and they have to wait for the cash to come in so they can pay for the truck. And getting a seller that will move fast enough on it is at times difficult. So, month of sales by cities here, everything is under a month. I mean, I think if we look at Indian Wells, we're just over a month. Desert Hot Springs at 1.3, surprised at it, but it's one of the lagging markets that's slower to reflect all of the price increases of everywhere else. So, it's not entirely surprising on it, but just on average, 0.6 to 0.8 of a month, okay, of inventory out there. So if somebody puts their home on the market, it's not going to take a month. Like Francisco was saying, he's getting it sometimes in 48 hours, what's going on. Days on the market, okay. Again, this is an average, okay, so we're looking at right now, the average home is lasting 28 days. Remember a chart or two back where we had the $1 million and above. We're taking more than a month on average, but as we got down to that $200,000 price range, it was like 0.3 of a month. So I can understand that there. But shifting market, Wayne, you've been renting out here for a long time. So how long would you say you've been watching the market in the Coachella Valley?
You know what? Interestingly enough, I haven't been watching it much at all until the last 6 months.
Okay.
Because what I found, we were coming every year until 2 years ago, of course. The pandemic changed all that. But when I was looking this past year about renting down here for this past winter, there just didn't seem to be very many opportunities anymore for places that I had been before. People were either going there themselves, that when they used to rent, or they were not renting for some reason because there was just not the opportunity anymore. And that's what got me thinking, if I want to come down here for the foreseeable future, I'm going to have to own something.
Right.
Because it's just too difficult to find rentals. That's what I was finding.
And that's true. And there's several. Some of it is the cities getting tougher on short-term vacation rentals, so it's making those smaller. Okay, if they always want to do it. I found that under COVID, people who weren't coming here are now anxious to come again. That there's that missing of being here. So homeowners are using their homes. I think that was pretty fair. Okay, with it, and it just made it much tougher. And a little bit in our industry, we have seen more and more specialized rental companies come in and either buying up inventory or contracting inventory to only deal with them, and they don't go into our MLS. And that has helped increase the prices. So I bet some of your choices that you were having to go through, it's like what I used to be able to rent for $2,000 or $2,500 is now $5,000. And it's hard to say, well, if it's $5,000, that's again, well, maybe I should look at owning. Because that starts to be just more money. The rental market has its own factors that have been
The pandemic changed everything because people, for 2 years, winters in Canada, they want to get away.
Right, you get a little stir crazy.
And then that's kind of really driven a lot of this.
I'm sure. Yeah, as a matter of fact, I was grateful this year. Several my clients from Canada have become like my best friends, and I didn't see them for 2 years. So it was really nice this past season to be able to see them. Days in market, again, it's hitting about that 28 mark. You can see as an average of 28, but when we break it out by different cities, Coachella, again, those speculative buyers, and you see another, are taking about 18 days. Make sure I'm looking at this right. Yeah, white is a year ago. Blue is this year. 18 days this year, okay, that a home lasts on the market there. A year ago, it was 37. Okay, and every one across the valley is less this year than last. If you average those out, you end up with about 28 days. This one is a truly amazing one. I was hoping to see, this is probably the chart I was waiting to see most. Okay, this shows what percentage of sales price are homes selling for on average. And as you can see, it's zero discount that's going on. And that's an average, okay, of what's going on. What I'm finding is that it feels like it's higher than that. Would you agree? I mean, I'll let Bruce take a stab at this.
I would say yes. Homes are selling, properties are selling for at or over asking price a lot because there's bidding and a lot of demand still. And, unless the property really needs a lot of work, chances are it's going to sell for asking or over.
One thing that I just don't know in the development of this chart right here, and I wish I did, and I don't even know who exactly to ask it to, but when they show a 0% change of sales price to list price, is that from the original list price, or is that was the last price that it was listed at while it was contracted by that same agent? Because if so, it might have gone through a price decrease to get there to where an offer would come in and still reflect 100% of the sales price. But maybe one day I'll run into the right person who can tell me that answer. That would be an interesting one. But I still feel that is lower than the feedback I'm getting. Would you agree, Francisco? Yeah. As a broker, I mean, I'm talking to a half a dozen agents a day or more, okay, and getting little bits of stories about where they're at in their deals. And I'd swear that we're running closer to 105%, 110% of asking price on average. Or at least that's the people that are coming to me grumbling about it. So I feel that way. Yeah. And I think we're getting near the end here, but there might be just one or two more. Price discount of detached homes. So this reflects a little bit more of what I'm saying. And realize that other one was an average. Okay, so a year ago is white, and this year is blue. So the other one, while it was 100% average on it, if you break it apart by cities, Palm Springs on average is selling 4% over asking price. Okay, I'm trying to think, well, they don't have Thousand Palms on here, but at Palm Desert, which you're butting right up against there, at 1% over in Bermuda Dunes. Thousand Palms butts right up against both of those. So 2.8% to 1.2% over asking price on average in that market on it. And if we look at the attached homes, even more, or I'm saying not even more, but substantial in its own right, matching right along the same demographics. And this is important because I feel that some buyers have had to switch that thought they were going to buy a single family home when they reached at whatever point of their life was going to demand a housing change. But they're finding because of affordability, maybe a condo is not so bad or a townhome's not so bad, and they'll do that. So as they have to look at the attached home market, okay, there's been a lot more people shifted into that who might have been in the single family homes, you know, a year or two ago when they first saw this period of their life coming forward. And that's it. So we just went through the desert housing market. Guys, let me just give you a last little bit. Wayne, seeing all these here, we'll start with you and then we'll work our way across the board here. How do you feel about the decision that you made to buy a house, and does this match with what you're looking? Give me some feedback there.
Certainly, these numbers do reflect that, and in my case, it was more of my own decision because I didn't want to keep getting, shoved out of the market by missing, unless I knew if I want to get something, I'm going to have to go a little bit above initially, right off the bat, before others even get a chance to look at it, and that was kind of my approach. And it reflects some of those numbers that you're talking about, that 2 to 3% over the asking price, because there's that risk, and you said it to me all the time. If you go in at an offer under, there's a risk that somebody's going to come in higher than you. And if you really want the place, you've got to make that decision. So very much reflects what happened.
Yeah, and I hope I'm not revealing too much, but I remember as we were doing it, even in how we handled requests for repairs and inspections, and those are very much reflective of what I'm hearing, from everybody at the table. And I know I appreciate you working through it, because if I were on the receiving end of all the information I have to get and give an average buyer, it would be tough to do it. So I hope you're happy with your home. I certainly tried hard to get it for you.
Oh, we're making it better all the time. It's only been 5 days in, but we're doing lots to improve it.
Cool. Francisco, what do you think about overall what we saw?
I think the data just reveals so much, and it's so important that we get it out. So when we get these, we have so many of the same questions, and if you show the data, it's easier to have a buyer consultation and explain, okay, this is the position that we're in. He had a great experience. Everyone's going to have that experience. You just have to be honest. And with the sellers, the same way. If you show them the data, you educate them. That way they know what they're doing going in, and we reduce the fear, because people are still scared. Everyone's thinking it's going to burst. And if we don't educate, we don't give the data, then we're going to stay in the same position where the inventory is not going to increase and buyers are still going to be doing the same thing. So, I love the data. So I always try to do the same thing. Just share the information, and that's how you get buyers out and sellers wanting to sell.
Good.
Yeah.
Thank you. And Bruce, yes.
I think the data is accurate, very revealing, and the number of homes on the market is really the issue, I'd say. Affordability, of course, is always a big issue, but having enough homes for people to buy and having enough business to sustain our real estate community, that's my biggest concern. But I do believe that in the next few months, as the market kind of levels a little bit, which I think it will, we'll have some increased inventory moving into the summer. And I think sellers will become more realistic about what their properties are worth moving forward than, what they were worth a number of months ago. So I do think as we hit the summer and into next fall that there'll be more business for everybody and hopefully some better buying opportunities.
I would agree with all of that. I see us slowly moving towards a more traditional style of market right now. It's not racing to it. It's not going to change in a month or two. But I think by the end of this year, my own belief is that we're going to be in a more steady market without these sharp increases going on. Like, it'll still be a steady increase of that 2 to 5%, but not this 30, 40, 50% increases, okay, that we've all had to deal with in the last 2 years. I hope I do. I think it's best for us as a country and as a world if we can go to that kind of stability so that people can plan for their lives and meet their expectations, as they're making these buying and selling decisions. So, thank you, Becky and Arthur and Cindy. I really appreciate you guys all being a part of it out there, and everybody watching it on YouTube or wherever else we are, Facebook. I appreciate your time, and to the staff, Stuart and Angel, that you guys didn't get to see, who are shooting this right now and learning with me so that we can improve things like our camera angles and our sound and those things, and we'll continue to try to improve. But thank you all for participating. I'm going to go ahead and sign off here. My name's Eric Meeks from RE/MAX Desert Properties. Thank you all for your time. Have a good day.
Thank you for watching the Desert Real Estate channel. I hope you found these tips interesting and enjoyable. Hope they help make you a better realtor and a better real estate buyer or seller. Please like or subscribe to these videos somewhere in the boxes below. And I'm Eric Meeks. If I can ever do anything for you personally, please don't hesitate to call. Thank you. Have a good day.